I think we are good to start. Rakesh ji, Shriyanka ma'am, can we get started?
Absolutely.
Sure.
All right. So let me welcome you all to this final round of the Knowledge Competition 2025. Today we have got five finalists for Payments Green Belt. They have already gone through a couple of rounds. One was qualification round where they have gone through the question and answer test. Then one more round where they have gone through the MCQs as well as the descriptive tests. And finally, the top 5 finalists have come to this stage, and today they would be presenting their insights on the different topics which were given to them. We welcome our esteemed jury members, Ms. Shriyanka Hore and Mr. Rakesh Verma. While they are very well known in the payments industry, we'll just take a couple of minutes. Our team member Kritika will introduce them and we will immediately get started with the presentations. Kritika.
Good morning and good afternoon to one and all. My name is Kritika Ayajit and I am one of the coordinators for this knowledge competition. On behalf of MVLCO, I would like to welcome our esteemed jury members to this event. We are delighted to have Ms. Shriyanka Hore as a distinguished member of our jury panel. Shriyanka ji is MD, Corporate Office and Global Head of Industry Relations at SWIFT, where she leads SWIFT strategic community initiatives and spearheads change at global level for policy, market practice, standards, and technology. She is also serving board member of SWIFT India, Emerging Payments Association Asia, and London Women's Forum, and holds multiple advisory roles across global industry forums. She has in the past led SWIFT's Global Product Organization for Market Infrastructures and Standards Implementation, which includes the ISO 20022 community adoption, and has led critical infrastructure upgrades and go-lives for UK CHAPS, ECB's T2, T2S, Australia's NPB, to name a few. Prior to SWIFT, she held senior executive leadership roles at Oracle, IBM, and has been consultant to global tier 1 banks. She also teaches payment course modules at CFTE and SEACEN and is uniquely positioned to evaluate both the strategic depth and practical application that will be demonstrated by our finalists. Her commitment to building inclusive, safe, and forward-looking financial systems make her an invaluable judge for this competition. Welcome, madam.
Pleasure to be with you.
Yes, and Shriyanka, I really appreciate the time zone. I mean, you've come so early from your time zone perspective. So for all the audience, Shriyanka is joining from London. It's really early morning for her. Really appreciate your participation. Thank you so much.
Love the initiative, so thank you.
Yeah.
We are delighted to have Mr. Rakesh Verma to our esteemed jury panel. In his most recent role, Rakesh ji led public policy, government relations, regulatory affairs, and social impact for Stripe in India and the broader APAC region. He has notably represented Stripe during India's 2023 G20 presidency in Business 20, Startup 20, and Think 20 task forces. He is a distinguished leader with over 2 decades of experience spanning across public policy, product development, and strategy consulting in the tech industry. His diverse career includes leadership positions at Reliance Industries, Visa, KPMG, and NPCI. A sought-after thought leader and speaker, Rakesh ji has published works on digital payments, emerging technologies, and next-generation banking in national and international journals, which further cement his role as a pioneer shaping the future of digital finance. His extensive experience ensures that he can evaluate our finalists on their strategic vision, as well as their understanding of global regulatory, technological, and policy landscapes. Welcome, sir.
Thank you, Kritika, and really delighted to be a part of this, judging this competition. So look forward to all the presentations from all the presenters. Yeah, thank you again.
Yes, and let me again formally welcome Rakesh ji. He was part of our last knowledge competition edition as well. So long time ago, 2020, but we welcome him back to this competition, this edition of competition as well.
Thank you.
All right, so I think let's get started with the presentations. Just for the sake of everybody, let me just let you know what we are expecting. So we will have 15 minutes of presentation from each of the finalists, followed by the Q&A from our jury members. I'll be sharing a timer. So finalists request you to keep an eye on your screen. You should soon be able to see. Let me just stop sharing and let me just start the timer. In the meantime, Deya, can you start sharing your screen? Deya is our first panelist.
Yeah, sure. Thank you so much. Let me share
All
my
right. So I'm just
get
testing, but I
started.
hope you are able to see a timer on your screen. Currently, it's just for a minute. Deya?
Yes, yeah, I
Yeah.
can see the time.
All right. So then let me reset it to 15 minutes and then you're good to go. Once you complete 15 minutes, there will be a beep sound. So please make sure that you stop before that and then we will open it up for question and answer from jury members.
Okay,
Are we good to
sure.
start?
Yeah,
All right. Over to you then.
yeah. Thank you, everyone. So, good evening, good morning and good afternoon to everyone. My name is Diye Tanna. I am senior business consultant in one of the fintech, and I have roughly 5 years of experience in the same in the payment industry. And I would honor to present my topic today, which is a straight-through processing in a payment, in front of payment enthusiastic team who is who is interested in this topic, as well as I'm also welcoming the jury who is having 2 decades more than that of experience in this industry. And last but not the least, I would also like to thank MVLCO team to make this kind of arrangement where we can share and learn from different persons. So yeah, I'll start my presentation. My topic is straight-through processing in a payment. So what we are going to cover today, okay? So this is a slide I have prepared so far. We'll go through the different stuff, which is a definition, why means diagnose the problem, how, which means we'll design how we can solve this with AI-driven technologies as well. What means what we have delivered so far and what is the benefit or outcome of this STP adoption, the strategic roadmap for sure, and the real world success story from different use cases across the globe. And last but not the least, the thank you note. So yeah, what is a straight-through processing? Straight-through processing is the financial transaction process that access end-to-end automatically without any manual intervention, which means from start to end, this payment process without any manual touch, automatically eliminate human touch, which traditionally slow down the operating system and may introduce the errors, right? So key points which we can think so far is a zero manual touch here, end-to-end automation process, real-time processing, which is a faster one or instant one, right? Okay, so I'm moving to next slide, the journey, non-STP versus STP processing. So I have taken a snippet which shows the STP process, not a wider map. I have put it down here, but the minimalistic one, and versus non-STP payment flow. So in STP payment flow, what we can see so far, anyone can initiate a payment from their channels or their platform to any payment engine. Payment engine may validate and transform that into specific version, we can say. Later it gets validated, the payment instructions get validated and goes to compliance, fraud, and all other stuff. Routing settlement is also one of the key area over there, and at the end it is confirmation. So it is just a full example we have taken here. Versus non-STP means each of the stage, one of the pointers, they may some manual intervention. So once it goes into repair or manual exceptions, a user needs to come up, rescue the payment, submit it, and it may need some 4i and 6i checks. So it's not just one person efforts, but many person efforts are being invested here in non-STP. So this is the flow. We'll go why STP matters for financial institution, why we are going in the journey, right? So repairing a payment requires extensive manual validations of a payment instruction within the bank system, right? It also, taking a lot of time. It's not just delaying the speed of a payment, but it's also, decrease the client satisfaction and also increase the operational risk. 4 points which I see needs to be understand why this STP matters to FI, which is a manual intervention, which is a bottleneck for them. So traditional payment process requires a human involvement, multiple manual touch points, which leads the delays, error increase and operational inefficiency, right? So this is the main bottleneck for them, operational inefficiency. So fragmented system, which with inconsistent data format create a friction in the payment flow, right? So it may increase the operational cost across the payment life cycle. With the both of these points, what end results the customer dissatisfaction because of this frictions and all. Customer may get dissatisfied because the settlement time is increasing. We are checking with them multiple times for their stuff inputs to process the payment ahead, and this reliability of our trust may get break down somewhere due to this friction of a payment. And at the end, what is the hidden cost for them? So manual intervention introduce a substantial hidden cost, which is a staff timing, IT infrastructure cost, opportunity cost by delaying the settlement process and everything. This is the point. So how? This is the how bank achieves this STP core enablement. So I have 6 set of cases which I am going to present. So structured data standards, which so we can suggest replacing a free format fields with a unique identifier, just like a BIC and NCC instead of a name, by adopting ISO 222 standard PACSET STP fields, which consistent fields we are giving in the payment instruction, which is readable and payment readable in a payment instruction across the system. Another point which I can see so far is verification of a payee. This is something crucial point which eliminates the risk of repairing a payment at correspondent bank side. This is a major reason why payment falls into repair. It also delayed and reduced the manual frequencies, right? Regulatory intelligence, which we need to understand whom we are sending, what regulators and compliance they are following, so we can add those details upfront in the payment system. Pre-validation at source, so we can also pre-validate the payment before it initiates, so that we do not miss any of the data to accurate and upfront visibility and validations, right? Intelligent auto reject and returns, we can configure some automatic reject and return for a specific use case where we know for sure that payment get not processed ahead, so we can do it automatically rather than manual intervention. At the end, which is the most a lovable thing or most of the FIs are doing right now, is a payment platform modernization. They need to upgrade their legacy system, which is a mainframe, to the latest system which is available currently, which is a more flexible, enable high rates of STP and advanced capability. So yeah, this is a next generation capabilities powered by AI. I have some examples like intelligent routing, which is a routing system we can think so far with the help of data available in a payment. A system can automatically pick a correct correspondent, which may have a less fee, reduce the delays, understand optimal routing paths, so that payment may not stop into repair with some routing errors. Autonomous reconciliation, we can train a mode that the matching of a payment or reconciliation may get automatically without any manual intervention, which dramatically reduce the manual reconciliation workload for sure. LLM based validation, so this is we can create a validation based on LLM. We can suggest some regulatory data inputs in the payment itself at the time of initiating it by validating it automatic, and that is one of the key point I can think so far. And predict exception handling, which offers by looking at the payment data and understand the pattern of a repair, we can suggest a configuration and automatically fix of a payment issue. This is a benefit I can see so far, and the good one, the visualization with the help of Prism, we can see by adopting this STP adoption, faster payment settlement, reduce manual efforts, Cost is obviously efficient. It is cost efficient. At the end, customer is getting impressed because the less friction in the payment cycle, risk reduction, and obviously scalability is the key point, right? I have a strategic program for the FIs to increase their STP ratio in a payment. So what they need to do so far, I have draw down some pointers. So they first need to identify their current payment infrastructure, go through that system, understand their payment infrastructure, and understand the bottleneck. Point number two, this is just an infrastructure. This is the second point is more over on a business and a payment use case. So they need to understand the categorizer of a payment, current STP, prevention areas, exceptional areas, manual reviews, and all complex routing. They need to identify that. Later, they need to identify that which of these use cases they can improve, improvise, and convert that opportunity from non-STP to STP. This is one of the major point they can think so far. Later, they can create a configuration, develop implementation, how they facilitate this payment automatically, which obviously reduce manual efforts, deploy some AI bots and task automations activity by RPA for seamless experience, right? Implementation approach, I can think so far is, they can start with the minor flows, with minor volume, low volume of a payment. Gradually, they can expand once they are confident enough. And this is not just a one-time activity, right? This is adaptive activity or an agile methodology, which continues need improvement. Collaboration, they can create a center of excellence team, including a business team, operation team, IT team, and they can achieve this so far. I have some real life example. When I was going through this or preparing this PPT, I was doing some checks on the internet, and few of the FIs have already shared this number across globally available to us. So one of them is Deutsche Bank, whose project name Global STP implementation. So they are doing this for their cross-border transaction, and which results their 98.2% STP rates in their incoming SWIFT payments, which is a tremendous percentage, right? Which actually reduce their processing time from 2 hours to less than 10 minutes. And at the end, significant revenue increase they can see so far because of these STP rates. The key factor they have done at their side is adoption as ISO 222, AI-driven technologies, centralizing data, and a validation. Another example is a bank ABA, which is Arabic Bank Corporation. They have also create this project site, and the results is really impressive, which is 100% STP rate in a treasury payment, 98.4% in a customer payment, and yeah, there's also a dramatic one, right? And last but not the least, Bank of America, they have also introduced some AI powered RPA, which result 95% of their targeted benefit, reduce the manual efforts by 89%. The defect count is also decreased at their side from 30 to 1 per process. They have created so far 22 RPA robots, which different RPA robots is doing different things. So not a one system, but multiple small agents are doing that STP work for their operational people. Last but not the least, I would like to thank everyone to listen me by patiently. I found one good quote, and I would like to close my presentation by that quote, that there is a way to do it better, just find it. And yeah, I'm open for a question answer, if any. I hope I have done this in a good time frame.
Great presentation. Yeah,
Thank you
yeah.
so
I mean,
much.
it was a pleasure listening to you, and I think you've highlighted and explained what straight-through processing, really means. But straight-through processing is almost like a non-negotiable, right? Like, why are payments in the first place getting stuck? It's like water flow in your pipes, right? Like over here, we're trying to justify why water is not flowing seamlessly and why that should be a necessity, right? Like for the flow of funds and capital. If I take a step back, maybe a few comments as well in your presentation. When you look at standards, you specifically, I mean, I'm giving you a little bit of refinements as well. when you spoke about standards, you mentioned BIC and NCC or national, crediting
PM
codes.
code.
Yeah, routing codes, whatever they are, right? Instead of names. So here you're talking about institutional names because BIC or business identifier code, and these are both. So normally that's never a problem. Okay. It's never really routed by the name of a bank because when you're in a secure network, whether it's a SWIFT, whether it's a MasterCard or any kind of platform, there will always be an identifier to access critical infrastructure. So routing, you know exactly who you're destined the payment for. The name problem is really identifying the legal entity to who the credit is determined, right? So that is where the problems lie. So if I'm trying to credit a company, right, and the company has a name which is basically AK Associates, AK
Right.
Associates Private Limited, AK Associates Limited. Okay, there could be number of legal entities with similar names. The initiative now is to have identifiable or legal entity identifiers in a more identifiable universal format so that these payments are credited exactly to the right entity. So you have loads of initiatives over there. Specifically in terms of verification of payee and pre-validation, I think they're very close but yet very different, right? So verification of payee is really what again goes down to identifying these legal entities, whether person or company, and it has to be
Correct.
at a national scheme level, or the bank. You have to have multiple banks because it cannot be just my bank offering a verification of pay. So that it has to be at a country level, or you could have private sector entities creating a verification of pay service with aggregated data from different banks and offering it. Pre-validation goes a step further, where it's not just pay, but it is also the underlying information of the banks, right?
Right.
Like it could be the structure of the payment, etc. I think you've pinpointed all of these very well in your presentation, so well done for that. My question to you is very simple, right? In terms of payments, right, and specifically STP of payments, why do you think there is forced manual intervention? One, we understand when there are exceptions and there is intervention, right? But almost as a risk or market practice, there is a forced, stop and check. Can you tell me what are these validation or compliance mechanisms today that are a forced stop and check, and how do they differ maybe at a country level? And I can add more to complement you. The question is more to educate as well rather than to check your knowledge. So you can give it a
Right, right.
try.
No problem. So yeah, I would give it a try with, forced one with a compliance or a fraud for sure, because
Mm-hmm.
that is something not in the payment initiator's perspective, right? It is more over a compliance or a fraud check perspective. So if I'm initiating a payment and the data which may relates to some entities which are, being in a hit list, so I can't say that, even though STP process I have defined so far, but I can, really STP such kind of a payments. So that is a compliance level activities, which I can say the forced one for sure.
Thank you. Yeah, you're right. But maybe I'll add a little bit over here. So there are two parts, right? So one is basically the fraud element of screening, and that can be automated to a great extent, and it's happening, right? So even when SWIFT
Yes.
transmits, we have solutions that check for fraud. But then in terms of the bank, there is an obligation to report to the central bank and do suspicious activity reporting, which is beyond just OFAC list screening or whitelist, grey list screening. It has to be at a more, that's where machine learning comes in, etc., to understand how anomaly can be predicted. But there is another part of screening, which is capital screening. And this comes from governments and central banks because they do want to monitor dollar flows or their own currency flows in and out, right? So that is what
Okay.
really capital controls or currency controls is about. And when we do the research, we see that the higher the capital or currency controls in a country, the more the friction is in credit, because there's a mandatory, FIRC, foreign inward remittance certificate, and all of that in India. So these are some of the compliance obligations that are set in. That's all from
Okay.
me. Rakesh ji, if you have questions.
Thank you so much.
First of all, really compliment for taking us through in great details regarding this straight-through processing in payments. Um, when I was you were presenting, uh, let me share one thing very interesting with you. I actually went back to my days when I used to do similar things. And especially when I was working with NPCI. So I still remember that when I was working with National Payments Corporation of India, I used to go to multiple stakeholders and make similar kind of presentations. So I was feeling that nostalgia. So that's
Yeah.
my question to you is, we all understand the importance of STP in payments, or for that matter, outside of payments as well in the broader financial services. My specific question is, what, according to you, is the single biggest challenge which the financial institutions face when they are trying to achieve full STP in a particular process?
The current infrastructure of any financial institution is the one of the key point I can think. Many of the banks are still using their mainframe technologies, right? And they may not that much good to increase their platform to integrate with multiple system to automating this and everything. So that is the one of the key point I can think so far, which they may need to think of to move to the modernization journey, because currently all the banks are moving going forward. ISO 20022 is one of the key initiative by Swift, which all the banks need to go through. Still, I know it is a compliant after November 2025, but still many of the bank are just using the transformation from MX to MT, and the back end they are still processing the MT one. So this is the key criteria they need to think from moving forward from infrastructure point of view, from legacy to the higher versions.
Maybe one related question to this is, while you highlighted that maybe the internal systems of the banks or the financial institutions, they are still, let's say, not fully integrated, if I understand it correctly. I mean, like, what is your view? What is holding the financial institutions back in terms of having an end-to-end integration, whether it is in terms of cost or capital, whether it is in terms of resources, whether it is in terms of a sheer willpower?
Okay. So first of all, as I mentioned, the infrastructure to increase or modernizing them, they need to think of a cost, which is a big cost, right? Because they need to adopt it globally. So the cost is one of the major point, which is a strategical investment they can think of. Not just a cost associated to the expenditure. It is an initiative which will get more revenue, but it is long time cost, and it is not just a few dollars, right? It is millions and billions dollars of investment they can think of. On another point, the resource is one of the key point, because the crunch of resources is everywhere in the payment industry, because it is not just okay, I can add a person who can learn the payment, because it is having a financial impact. So we need experts there. So resource allocation, crunch of that is also key point. They need to strategize it in a different way. It's globally, right? They need to start from somewhere in a small process, and they need to go further. So many of the bank personally I have seen so far, they are initiating not on the global level, but on the smaller point of view. And later, once that project got implemented successfully, they see some, advantages of that, and later they'll just took that initiative and all the key takeaways to the different process or a project, and they'll be expanding this. So yeah, the cost, opportunity, the time frame, the regulatory time frame. Currently more our people are focusing on the ISO 20022, so they have also time crunch there. They need to do a regulation regulatory is the first before they are moving ahead. They can't omit that. So multiple ways they need to think of here. I hope I try to answer a question.
No, absolutely. I mean, like, thank you so much for taking me through that response. I don't have any further questions.
Thank you so much.
Maybe just
Or-
one last one before.
Question?
So very short one. ISO 20022. Who is responsible for ISO 20022?
Responsible is the bank for sure, but it is something Swift-driven initiative. So it is a regulatory, I can say, who is on the Swift network. So the financial institution who is the responsible for not complying that.
Okay, two parts to it quickly. ISO organization is responsible for ISO 20022. They register that and make it. Swift,
Okay.
being a community good, we developed the first instances of the data model, and then we gave it as a community good to the ISO. And we are adopting ISO, but it's really about reeling the different market infrastructures. Like for example, if India chooses to take ISO 20022, which they are basically on RTGS, it's absolutely independent. It's a common global community data standard, and anybody can implement, whether it's at a market infrastructure level or whether it's to re-rail and re-architect the bank. That's one thing which is often misdiagnosed or misunderstood. So you're right. I mean, the initiative is driven on our network, but the responsibility is um, distributed. That's all from my end.
Thank you so much.
Thank you so much, Dev. Nice presentation. So
Thank you.
we'll
Thank
move
you.
on to our next finalist, Monica. Monica, are you there?
I'm so sorry. It was my system who was taking time to
No problem.
just making myself display here. Hello, everyone. Let me know if you're able to see me or hear me perfectly.
Both
Yes, we
perfect.
can. Yep.
Thank you so much. I welcome you all, and I'm very grateful to everyone to give me this opportunity to present about this today. I would like to start my introduction. I'm Lalwani Monica. I am working as a business analyst in the payments domain. It is around 10 plus of experience I carry with me, and around 5 plus experience. I'm just living and breathing this payments world. So, yeah, I would like to start with my presentation and sharing my screen. Let me know once you're able to see my screen.
Now, yes.
I hope you are able to see.
Yes, I'm able to see innovations in payments domain, Monica.
Okay, thank you so much. So I would start like how I got motivated to pick this particular topic. It was really basic when we used to stand in our ATM queues or withdrawing the money or depositing the money back 15 years, and now we are actually just tapping, and sometimes it's a palm and pay technology which is enabling us to make the payment very much seamless and the frictionless. Also, if you would be wondering, this image which I have kept it on the slide, which is not actually a template, but it is actually showcasing how and what technologies we are enabling us in the background so that we can do our work better in front end. I'll move to the next slide, which will talk about what we will cover today. We will start by the understanding how payments have evolved, followed by fueling the innovations today. They will deeply dive into the most disruptive things and the technology, look at the global examples and reflect on the challenges and the opportunities, and finally visualizing the road ahead. Now the evolution of the digital payment. So how it has started, as I mentioned in the earlier slides, Imagine you are standing in the queues, long queues to withdraw your money, and when you are just depositing your money. But now, actually, it is happening with the technologies who enable us with just a seconds, and we just it is enabling us to move the money faster and seamlessly. Every leap in so what is basic factor which is actually creating this every leap in the payment came from solving one only problem, which is called convenience. Now, like, moving from cash to cards and then IMPS and UPI, and now we are embedding payments into our daily actions. uh, everything you do today, like whether you are having the dinner outside, you are going through the cab, or maybe you are just sitting at a home to order for your groceries, which will come in the minutes, and you can just utilize whatever you want to do. As they rightly say, it is Cybers 2025. The future of payment is not longer a transaction. It's about how you give experience to your customers and the stakeholders. We are just getting it started. So payments are just a faster, they have become smarter, seamless, and invisible. Here, I would just like to address transformed payment landscapes. So regulators which are opening new pathways like ISO 2022, enabling us from moving to MT to MX standards, where we actually utilize the richness of the data to maybe analyze it and use it in our analytics AI to have the more personalized and more insightful view to run our businesses. Big tech and non-banks like Google Pay, Phone Pay are leading the user experiences nowadays. User now expected not just a speed, but the instant gratification. We don't want to wait for anything right now. It's just everything we want on our one-click action, or maybe just you need to say, and the future is you just need to think about it. User now expect it's not about the meeting the expectation of the customers anymore. I would say it's more on the delighting your customers, which is actually helping making us to happen these innovations in a reality. And the one businesses which are getting or sensing these demands are actually winning the race. The innovations imperatives, why now it is happening, as I told, that consumers today, even a rickshaw driver, or maybe if you think about paying your children school fee, you it is everything is accepted by UPI. I remember buying pen of 2 rupees, and I'm just doing UPI for it. Regulators with the standards like ISO 2022 and open banking change is not the optional anymore. Competition of the new players are rewriting the rules, and bank just need to keep it up. If we talk about the tech maturity, agenting AI was showcased ordering your groceries, settling payment autonomously. We are entering in a phase where technology doesn't support payment. It actually acting on behalf of us everywhere. If we talk about the technology maturity, it is like from starting the cash to then cards, and then a UPI, IMPS, and nowadays it is going for the cryptos as well. What is actually elevating this world, which is, I mean, what actually the factors making us to move in the direction of this elevation is real-time processing will hold the first rank here. Why? Because already 70 plus countries, over the 20 trillion projected in 25, user want money to move like a DM, like you are sending the WhatsApp message across the borders, or maybe you are just communicating easily without any frictions. Embedded finance, that's the favorite one of mine, and APIs, because you think wherever you are shopping or traveling or making any payments, have you Have you ever really skipped it or maybe exited because of making the payment causing an issue? Unless it's our digital money which gets empty very easily, and we don't have balance to accommodate that. E-commerce players want you to get addicted behind this, and not just through the sales, but actually AI here also enabling everyone to understand the pattern you carry with you. So the consumer driven everything, embedded finance is taking care of. If we talk about the technologies here, blockchain and the tokenization, stable coin, CBDCs, and tokenization, the coins which recently JPM has introduced, JPM coin, they are running the money. It's into a programmable borderless value. These aren't the theory anymore. They were live demoed in the Cybers 2025. The message is clear. Innovation, it's actually not a future anymore. We are living in the innovations. Technology maturity landscape. So how I would start it is, mainstream adoption is what wallet and the contactless payment currently holds. Where we see the rapidly growth is real-time payments and the API, instant settlement of infrastructure deploys across major markets. API ecosystem enables embedded finance at a scale. If early adoption, what we are adopting, like what is the phase of the early adoption carries is the BNPL and the biometrics. Buy now pay later reshapes the consumers, and the biometric authentication gaining the mainstream adoption nowadays. As I mentioned earlier also, the China who is enabling this pay in palm technology. Emerging innovations are the stablecoin and the tokenization, where we are actually looking for the frictionless and seamless transaction over the globe as well. Not only, so it's not that UPI should work for you only in the India, right? It should be everywhere. Or maybe if I want to transfer money to US to my friend, I should be able to do it within the seconds, which actually taking time nowadays. Experimentation, which is holding the place, is agentic payments and the CBDCs right now. Even I was hearing the talk, Sitaramanji, which who has actually demonstrated how Payments of India and NPCI has announced about the CBDCs. Let's see how it is taking the place and how the future is actually shaping, but this is what the landscape look like. Also, the investment is the catching up. 72 billion forecasted by 2028, and everyone wants to get them. Let's talk about the project Karina. So it is actually the revolutionary project for the cross-border, where JP Morgan and KB Bank pulled this off using the blockchain technology. You imagine when the cross-border payment, which was happening, and it was taking the time of 2 to 3 days, maybe 72 hours sometimes. Now it is actually happening seamless with the technology they have adopted, turning that. I mean, it is really commendable to see how JPM coins are actually making this happen in very much faster, cheaper way, and it is available 24/7 also, and this actually demonstrates how adopting these new technologies enabling us to be more efficient, and it can reduces the time like 93%, which is drastic. This is my favorite so far. It is NPCI innovations. We are actually living it. So closer to that, if we start about UPI 123, which actually enables us in the feature phones when the smartphone were not there, UPI Litex for the offline zones, and even the e-rupee pilot, which is going on. It is inclusion at a scale now. And there is the kicker, over 12 billion transactions processed every month. So yes, innovation is a global nowadays. In fact, in GFF, as I mentioned, it was all demonstrated how NPCI is shaping our world. If we talk about the strategic challenges and opportunity, old infrastructure, regulatory environments vary across the countries, digital trust and the financial literacy are still the gap. Opportunities, if I talk about, it's the cost saving up to 60% in the operation. We can get out from our legacy systems and reaching the next billion users. The gap is wide yet. Strategic playbooks for all the stakeholders here, like banks, modernized infrastructure, fintechs innovates the fast but don't ignore the compliance, merchant who make payments invisible, data valuable, and regulators enable innovations while the guarding users' trust. This is the one theme which was presented at Cybers, that open ecosystem will lead this next decade we will be going through. I'll move forward to the road we have in the future. You just imagine that you are having the last glass of the milk, and AI has already placed your order for your grocery and milk. Suppose you want to send $2,000 to your employee across who is sitting in US, and you are just need to say to your phone that okay, make this payment, and it will done. This is actually not a dream anymore. We are at a destination, I would say. So I will leave you with this. In the world we are leading ahead towards, will businesses processing payment anymore, or it's more like a personalized and a predicted feature which has been plugged in? Thanks everyone for your attention and being a curious audience. Hope this session sparks a new thoughts for about where the payments are leaded. I would be delighted to hear your ideas and the questions if you have any more.
Maybe, okay, I'll start. Great presentation. You've covered like a number of things when it comes to payment innovation. I think, payments is such a beautiful place. And you began with like you live and breathe payments. I can completely relate with that. And payments is that domain where technology, policy, everything, converges, and you can really feel it even as an end user, right? And we've come a long way. In terms of your presentation, when you swept over a number of things, probably some places there is a focus on talking about the innovation as an end user. Let's look at it a little bit in terms of the regulator, right?
Yeah.
So when you look at stablecoins, tokenized assets, as well as central bank digital currencies, okay, and distributed ledger, why do you think that all of the friction that was in traditional banking and traditional rails has suddenly disappeared or does not exist in new platforms, right? We spoke in the previous presentation, we spoke about reporting, etc. Why do you think that does not exist or carry over into new cross-border platforms? That's one question, okay? And then just to follow it up, maybe on India and specifically on CBDCs, what are the barriers to enabling wholesale CBDCs in India? If you've got thoughts, that's fine. If not, that's fine too.
I would say CBDCs is something. I would actually like to start with CBDC first.
Yeah.
So I would say CBDC's barriers are mainly that what people would think before adopting it is, again, I'll answer as a end user for that, because it will be more like that now everything will be visible. Whatever you are spending, whatever you are doing, how much you are withdrawing, everything is recording somewhere. So it actually is not that trustworthy, or maybe trustworthy for every one of us to adopt it right now. And I would request you if you can just reiterate the cross-border question for me once.
So cross-border, I mean, in traditional banking and traditional rails, there are a number of reporting and deliberate friction points just to ensure that cross-border payments are safer. On the other hand, you have distributed ledgers, right? Some of them are privatized and some of them are national held, right? Or a group of central banks holding them, etc. They're different concepts. And the assets are no longer traditional money moving over it. There are newer asset classes, tokenized deposits, stablecoins, CBDCs being some of them. Why do the same risks and reporting frameworks in traditional banking and traditional rails not applied to new? Do you know it, or do you have a view on it?
Yeah, I would
I
like
mean,
to.
you can answer it hypothetically as well in terms of what should and should not be, or why it's not needed, or why it's needed in the future. Make it simple.
Yeah, I would say regulation is actually a challenging thing to be adopted for the this cross-border how we are just migrating nowadays, and for the previous rails not to be existed is that now we just want this immediate gratification when applying this cross-border stable coins or the tech tokenization, which actually doesn't related with the traditional methods which the money movement used to take it up.
Thank you. Over to you, Rakesh.
Thanks, Monica. Great presentation.
Thank you so much.
While you were making that presentation, I could very well relate to that. You were talking about some of those institutions or organizations and payment methods, which I was very closely associated with when those were being built. Especially talking about you in one of your slides, you mentioned about NPCI case study, and NPCI, as you may know, is one of my previous organizations. I've spent my almost 7 years with NPCI. You also talked about implementation of IMPS, UPI, etc. And when you are making that presentations, I could feel that these are like some of those payment systems to which in my individual capacity I have made a humble contribution. So again, it was going through that whole process, whole journey all over again, and I could feel that excitement. You touched upon two very interesting topics in your presentation, which are very close to my heart these days. One is your stable coins, and second is your agentic payments. But so my first question to you is, and I'm like, there is nothing right or wrong. These days, there is a lot of discussion happening around agentic payments, right? That AI-based agents could place an order, could let's say shortlist the merchandise or whatever you want to buy on the basis of certain prompts or your preferences, etc., and they could complete the buying or shopping experience as well as making the payments on behalf of the user. That's one aspect. Similarly, I think you may recall that a few years back, there was a lot of discussion around IoT-based payments, Internet of Things-based payments. And I could give you a few examples that people were talking about. A lot of literature was talking about, let's say, vehicle making payment on its own for the fuel replenishment. Then there was another example which was very, hugely discussed, was that's a swimming pool making payments for its own requirements, maybe some chemicals, etc., etc. Then there were another very popular example was a refrigerator making payments on its own to replenish the, let's say, items which are getting, let's say, exhausted, etc. But all of a sudden, no one is talking about IoT-based payments anymore now. So what do you think, that agentic payments, is it for real or it is more of a marketing buzz?
I would say it has the everything comes with the pain, right? Every gratification comes with little pain or the disadvantages of it. We are moving to this agentic innovations and making the payment through this I think sometime, suppose if I go to that example only, that the refrigerator is taking whatever is in it and then fueling up whatever is not there in the stock. But it should be like, what if I'm not in a mood to have milk tomorrow? Okay, but still it will just order it. So some of the I would say thinking or the pattern which we human carries, we will not be addressed in the agentic AI. That is my point of view. And yeah, as you rightly mentioned, but every world is moving through this. People are actually more curious to explore it, and that is why the buzz is on, particularly on agentic AI, the most than the IoTs.
Okay. Related question around the agentic payments is especially we as Indians have a different psychology altogether. While agentic payments could sound very, I mean, like very modern and maybe the thing of the future. I mean, like that's how we see it. But do you think that, especially considering the Indian psyche in mind or Indian user psyche in mind, do you think that they will adopt agentic payments?
Yeah. So
Maybe I can share my example with you
yeah,
first, and then I would like to hear your thoughts. As a user, I may be comfortable with half of the process. Maybe let's say AI-based agents could shortlist certain goods or services based on my preferences, but I would never like the AI-based agent to make payment on behalf of me. Payment, the control over the payment I would like to keep in my hand. That's my view, but I would like to hear your thoughts as well.
yeah. So I would align to your thoughts in terms of the demographic what we share. Suppose if we consider our parents, okay, if they want to transfer money now, my dad actually uses Beam application to apply the IPOs, okay. But to transfer money to me, if I want 25,000, he will go to bank and he will just deposit a check and then it will transfer to me. So they are living in that tradition, even if they know the technology is there. If we talk about the age group of our, it is more like we want to have the control over this payment and everything. But if I talk about the Gen Zs and the generation after that, they just want to live their life without any worry, without any friction. They just don't want any interruption over there, and they want to automate everything. Maybe if it is, or it is so much embedded in our lives right now that they just want to sit at a one place and focus what they are doing, and everything should run beside that. Like even the AC, when you are entering home, your AC would start with just a Alexa command. So it's that easiness which everyone is wanting nowadays. That is what, like, I would say it is a categorized in the generation based how the adoption will look like.
Okay, no, absolutely correct. I think uh, with every new generation, there comes a lot of cultural and habitual shifts, which we see every time. And your response also made me realize that we are now getting older. Uh, and, and, and I believe, I think you guys are part of that Gen Z. But limited thought here is there could be scenarios, and I'm sure the stakeholders will also think about it, especially in the AI-based agentic payments. There could be scenarios around your AI-based agents going rogue and let's say making payments or making orders, placing orders, even if you don't require those things. So I think this is one of the areas which needs to be carefully examined and evaluated before, let's say, real life use cases are implemented. That's one. My second question is around stable coins. So there is a lot of discussions happening globally around stable coins. But when it comes to India, especially the Indian government / the Indian regulator, they are very careful and very sensitive when it comes to the stable coins / cryptos, etc. What is your views? I mean, like, obviously the regulator has always been talking about challenges to monetary policy and financial stability when it comes to adoption of either stable coins or crypto, etc. What are your views around it, especially in terms of should India be experimenting with crypto / stable coins, or do you also feel that the regulatory approach of keeping ourselves away from crypto / stablecoin, that should be the way, and we should only deal in sovereign currency?
Okay. So I would like to start it with very basic example. I remember while studying, my mom dad doesn't want me to hold phone, okay, and just get into the phone. But then when I had to attend the online classes. I had to do some things which are unavoidable, and especially this pandemic has shown us the contactless world, right? Physical contactless world. So actually, it applies to that. It is not a regulator's wish anymore to whether support this cryptos and stuff like that. But the thing is, they need to adopt it because world is moving there. So if and think about that, if they would have some blockchain technology which is not in their control at all, rather they should themselves only introduce something which should support this transition. So I would say regulators maybe not supporting with the wish, but they are supporting because the world is moving there.
Okay, fair enough.
That's my point of view.
Fair enough. One last quick question. So you also touched upon CBDC, central bank digital currency, and you may know that India implemented or started the pilot for wholesale and retail CBDC, I think towards the end of 2023, if I am not mistaken, maybe November, December 2023, etc.
Yeah.
Now, especially talking about retail CBDC, while the regulator is trying to push the usage of retail CBDC, the usage has not been that great enough so far. So what do you think is the reason why people are not inclined, or why there is not such a good adoption of CBDC so far in India?
Yeah, so I think okay, as I already mentioned with the Shriyanka as well, that one factor is you don't want the control to give the control to government to hold every transaction details what you are doing in a day. I mean that record of
Anonymity you are talking about. You want certain transactions to remain anonymous and not known to anyone, which is
that
provided by the
that
physical currency.
yeah, that is one factor. And another factor is when people are already adopted to this UPI payments, okay, they are actually enabling them to do every transaction, and that is known for them from couple of years now, like from 2020 15, say for example 16 maybe. So now they are actually will adopt maybe CBDC after that, but right now the adoption is less due to these factors that they are well known, whatever the current system or like the UPI enablement, and plus they don't want the control.
So essentially, it is that UPI is already has done a deep penetration, and that is the reason that it is creating. I mean, like because of that reason, the CBDC is not picking up. Okay.
Yeah, I would like to associate one real life example. So I moved Pune 3 years back. In my town, they were not using UPI too much. Okay, when I came here, when I offered the cash to auto driver, he refused to take it. He said, "I'll only accept this UPI." And after 3 years, now I'm going back to my hometown. I could see that the same logic and same pattern has been adopted there as well. So now the rural areas also adopted 60% of these UPI payments in the day-to-day transactions.
Okay, thank you so much. That's all from my side.
Thanks, everyone.
Thank you so much, Monica. So I think let's now move to our third finalist, who is Shraddha.
Yeah. Hello, everyone. Let me share my screen.
We see your screen. Yeah.
Yeah.
Hi, Shraddha.
Hello everyone. So let me give you a short introduction of myself. So uh, as you all know now, my name is Shraddha Rai, and I bring 12 years of experience in the IT industry, with last 6 years in the banking sector. Although I haven't had extensive hands-on or exposure in payments so far, uh, I'm very interested in the payments domain and keen to increase my knowledge. So today I will be presenting to ISO 20022 migration in the payment industry, a key topic shaping the future of global payments. So, yeah. So yeah, introduction to ISO 20022. So ISO 20022 is a global standard for financial messaging that defines two common language and data model for payments and other financial transactions, developed by the ISO International Organization for Standardization. It is used across payment, security, trades, FX, and cards. In short, it enable consistent, structured, and interoperable communication between financial institution worldwide. So, sorry. Yeah. So, why ISO 20022? So, legacy standards like ISO 15022 and Swift MT have limited data capacity and flexibility. ISO 20022 enables detailed, standardized payment information, including remittance information, ultimate data and creditor information, and purpose code. Like empty message type has limit of 10,000 characters, including headers and trailers and all other fields. And MX message type has up to 65,000 characters limit. So basically 64 KB per message. And MX message type, yeah, so again, it supports to AML, KYC, and regulatory reporting more effectively, enhances straight-through processing and reduce manual intervention, provide common language across banks, countries, and payment system, enabling seamless cross-border and domestic payment transactions. So ISO 20022 is designed to modernize payment messaging, making transaction faster, smarter, and more transparent. So yeah, so key features of ISO 20022. ISO 20022 migration represent the global shift from older, less structured messaging formats to a single modern standard for all financial communication. Uh, uh, it is designed to enable a richer, more structured, and interoperable messaging across the financial ecosystem. And its key features like a rich structured data model, XML based, and then supports multiple business domains, flexibility and extensibility. Um, as I mentioned earlier, that it enhance remittance and regulatory reporting. So ISO 20022 provides a future-ready standardized messaging framework that improves efficiency, transparency, and interoperability across global financial system. So yeah, so let me talk about migration timeline globally. So the migration for SWIFT cross-border payments started in March 2023 and is expected to complete by November 2025. In the US, chips migration had happened to ISO 20022 in April 2024, and Fedwire, which migrated from the legacy format FIM to ISO 20022 in January 2025. And in Europe, payments like Target 2 and Euro 1 completed their migration in 2024, though the coexistent period for the cross-border messaging continues until November 2025. So this is the last month, and overall, this time shows a phased global adoption, with most major payment system now either migrated or in the final stage of transition. So so ISO 20022 in the payments ecosystem. So like central bank, commercial bank, payment service provider, corporates, and fintechs. So central banks and commercial banks are financial institution, and payment service provider and corporates and fintechs are non-financial institution. So let me go through in detail. Yeah. So what is the roles of financial and non-financial institution? So in the ISO 20022 migration, both financial and non-financial institution play important but distinct role. For financial institution such as banks and central banks, the focus is on modernizing core system and processes, strategically implementing ISO 20022 and ensuring interoperability across payment network. On the other hand, a non-financial institution includes operates and corporates and fintechs needs to adapt their payment interface, collect and manage structured data, facilitate effective communication with their banking partners. So yeah, together this effort ensures a smooth end-to-end transition to ISO 20022 across the global financial ecosystem. So few ISO 20022 message types I have mentioned here, like PEX8, PEX9. So PEX8 is finance FI to FI customer credit transfer. PEX9 is for FI to FI credit transfer. PEX2 is for payment status report, and PAIN1 is for customer credit transfer. PAIN2 is for the status report to customer from bank, and then KEMT 53 customer statement message. KEMT 54 is confirmation of credit or debit. KEMT 56 is payment cancellation request for recall, and then PEX4 for positive response to recall request. And then yeah, so let me go through the process flow. So based on ISO 20022 payment flow. So it starts with the data initiating a payment using PAIN1 message to their bank, and the bank then sends an acknowledgement back to the data as a PAIN2 message. Next, the bank sends PEX8 message to intermediary agent or a clearing system, and the intermediary response with the PEX2 acknowledgement message. Once the PEX8 message reaches the creditor's bank, the transaction is processed and the creditor bank credits the beneficiary's account. Finally, the credit bank sends the KEMT 54 message for confirmation of credit. So in short, ISO 20022 to ensure that each steps of the payment life cycle is structured, traceable, and confirmed through standardized messages. Yeah, so this is I have created this flow to my understanding for SEPA SET payment flow, where SEPA payments work in file based. So like ICF file, input credit file, CVF file, credit valuation file, SCF settled credit file, IQF file, QF file, and OQF file. So ICF file includes PEX 8, PEX 2, PEX 4, CAMT 56, CAMT 29, and PEX 28 messages. IQF file include messages like CAMT 27 and CAMT 87. So yeah. So benefits of migration of ISO 20022. So first, it improves straight-through processing, as I mentioned earlier, making payments faster and reducing manual intervention. It also strengthens sanction screening and AML compliance due to richer or more structured data. Corporate benefits from richer remittance information, which makes reconciliation easier and more accurate. So yeah, in short, the migration enhance efficiency, compliance, and transparency across the entire payment ecosystem. Yeah, so challenges in the migration. So integration with legacy system can be complex, and older infrastructure wasn't designed for rich structured data. So mapping data from empty message to MX format is another critical challenge. So it requires accuracy to avoid errors, and the migration also involves high implementation costs and need training to resources to ensure readiness for the new standards, and managing the coexistence period when old and new messages format operates simultaneously, and that adds operational complexity. So despite these challenges, careful planning and strategies can ensure a smooth transition to ISO 20022. Yeah. So I have listed out few migration strategies. So the process starts with assessment and planning, when organization evaluate their system processing and readiness. Next is impact analysis and gap identification, which helps highlight areas that needs updates or changes. After that, data mapping, converting existing empty messages into the new MX message format. This and then after that, testing and validation to ensure messages are accurate and system are fully capable to process those message. And yeah, finally, after the go live and coexistence of the messages, we need to monitor that. So this structured approach ensure a smooth and controlled migration to ISO 20022. And now ISO 20022 and Swift CBPR Plus. So CBPR Plus, which stands for Cross-Border Payments and Reporting Plus, is a Swift's global initiative to improve harmonized ISO 20022 messages for cross-border payments. The goal is to ensure interoperability across banks worldwide, making international payments faster, more transparent, and easier to process. So,
Shraddha, the last few seconds left, if you could
yeah,
conclude.
I am left with 2-3 slides. So, yeah, I have mentioned the case study of Target 2 and yeah, future of payments under ISO 20022. So it's enabled a unified data-driven ecosystem where rich structured data flow seamlessly across institution, and this allows for enhanced analytics and AI integration. So yeah, so ISO 20022 is shaping a faster, smarter, and more transparent payments landscape. And yeah, the conclusion. So yeah, in conclusion, ISO 20022 is the future of global payments. It goes beyond being just a messaging standard. It serves as the foundation for the next generation of financial messaging. So yeah, ISO 20022 is key to modernizing the global payments landscape, making it faster, smarter, and more transparent. So yeah, thank you everyone to listen to my presentation. I would like to conclude with a quote which I am highly believe in, that this is not the end, but the beginning of the continuous improvement. So yeah, thank you everyone.
Thanks, Shraddha. You've put in a lot of work to actually go through ISO 20022 clearly. That's literally 20 years of my career that you've managed to present in your given time. Um, I will give you an option to ask me your topmost, what's on top of your mind that you don't understand about ISO 20022. That's your question, basically. You can ask a reverse question. I think that's the easiest for me.
Yeah, so actually I have a little confusion that
Mm-hmm.
after this migration will happen, means the uh, maximum time will be extended to 2028. So after that, all the messages will be migrated to ISO 20022, and there will be no any empty formats. But what will happen if few banks are not migrated? So that is still confusing for me. However, there is a support from the SWIFT that both the messages are means the banks who is not accepting the MX messages, they will get the empty messages converted. But how long it will be that it should be stopped to globalize the single process? So that
Okay,
is my still
maybe
confusion.
my answer is very simple. So first and foremost, ISO 20022, right? It is just another um, data model, right? And it's nothing new. Before that, what you call empty messages was ISO 15022. So basically, when you have a major critical infrastructure like Swift, uh, you develop standards at a global network level, which then go on to become open standards. So I 15022 was basically closed standards and proprietary, and this is open, right? And open means for all. So there is nothing like Swift will stop it, or it's not a button like that. What we are doing for the network and members of our network is saying that this is a coordinated migration. November 2025, 10 days from now. Okay, it's keeping me sleepless. We will basically ask all of the banks to ensure that they're able to send and receive. Those who do not, there are alternate solutions. There is no such date as 2028. There is no such date. Okay, 2025, that is the date. Now it is not mandatory for say a market infrastructure. A market infrastructure, you've mentioned the Fedwire, you've mentioned chips. They're taking their own pace and own time for their own community. Similarly, Swift is taking its own timelines to move. And there are two ways of doing it. One is big bang, you switch off and you switch on, right? And then the other option is coexistence. What we've done is we've been in coexistence for 3 years. After that, we're saying we have to flip the switch. Otherwise, it is added cost for all on the network to maintain two standards. So it is not just about standards, it's about the standards of exchange. But the standards inside your bank, you have to, over time, to tap in to all of the different business models, whether it is old payment rails, new market schemes, distributed ledger. You need one common language to exchange. So this is basically that common language. And then there are different market practices. CBPR plus, you mentioned that. That is not defined by SWIFT. That is defined by a neutral body called the Payment Market Practice Group, PMPG, right? And there are different market practice, cross-border, HVPS plus for high value RTGSs, IP plus for instant payments. So it goes through a flow. So these are some of the concepts. But specifically, maybe I ask you a question at this point, Shraddha. When you studied the ISO 20022, and I think you've done a lot of theoretical work in terms of that, do you understand the difference between data elements, message structure, and market practice? And will you be able to talk me through that?
Yeah. So data elements, message structures, and market practice,
Market
right?
practice.
Yeah. So data elements like that currently in the ISO 20022, we are following the sorry, I forgot the name, but yeah, that BU business application headers, and then documents, and then we need to add all those information to for all the data elements for the messages. And message structure is basically it's on the XML based message structure, where we as I mentioned that business application header. So let me give you an example. Recently I was working on that based on new Euroclear transformation. We have received earlier that business application header should be version 3. And after the bank has done the testing, and then they are accepting only version 2. And they have already shared the latest document with version 3. So that structure we need to follow, where the clearing system is accepting the message and it should be processed. So bank and clearing system, and it should be aligned with the same message structure. And market practice you mentioned, right? So as I have mentioned earlier as well, that if the ISO 20022 it should be globally aligned, so market should accept that. And so as I have mentioned, that all the bank and financial institution should be migrated as soon as possible, then that it will be easier to for the payment transaction or any financial transaction to align with each other. And it should be as I have mentioned earlier, that few banks are not uh, already transformed. So empty messages, and means they are receiving MT and MX messages.
Okay.
So there are.
I'll stop you there. Basically, let's go back to data elements. Data elements are very simple. They are like address, party name, right? So when you have, and they can be nested, right? So basically, in a tagged format, it was line 1, line 2, line 3, and you didn't know what each line meant. In this data elements, if you have an address, you have basically postcode as a specific, tag and so on. So it's more machine readable. These data elements are then nested into a structure, which is your message format. These are different types of messages that you spoke about: PAIN, PAC, SCAMPed. And a bundle of these messages then form a market practice, right? The market practice is basically so that there are no such confusions on which version, which application header, or which, because even within a big ISO message, there are lists, like, for example, currency codes, right? Or identifiers, which follow different ISO sets, 4217 and so on. So when you look at some of this, market practice makes it easier to say that, okay, we are adopting CBPR plus, all banks need to align to CBPR plus for cross-border. Similarly, if you look at, say, Nexus, which is basically instant payment schemes joining together, it's an alternate exchange model. They could go for a different format, but they're choosing CBPR plus as well, right? So it's open, it's not limited to SWIFT, right? It could be different platforms aligning to a market practice. And if you look at Australia and if you look at Canada, they've both chosen HVPS plus as their RTGSs. So it's how you layer the onion and how you build it. but I really value people who take the time to go into the depths of ISO. It's a very dry and boring subject, and people have devoted careers. But it is the next generation language in which markets, countries, banks will speak to each other, and will be the foundation of agentic AI and everything else that is to do with data and intelligence and analytics. So thank you for all of the work that you've put into it. Rakesh, sorry, it took more time.
No issues. Shraddha, first of all, a great presentation, and I could very well see that you have put in a lot of efforts to prepare your deck. So really compliment you on that. I have just one question. While all of us are talking about ISO 20022 migration, straight-through processing, etc., what according to you is the single biggest risk which the financial institutions face or have faced during the ISO 20022 migration? And maybe I would like to have your thoughts how they could have better handled it.
Okay, so there are multiple risks which means during this migration has happened. One risk is as I have mentioned in the presentation as well, that there are the migration from MT to MX message conversion, and the resources should be able to understand that mapping, and then only so as I was a part of one of the project where I was working from the payment initiation channel side, but however I was aware about this. So during the COVID especially, there is multiple switches happening during that time. So many team members who are joining in, and they are not aware about anything about the payment, and they are a part of the testing team who is not able to understand the mapping. So they are just means I have experienced that they are putting account number, same account number in debtor and creditor both, and then they are coming up with this scenario is working. So so that is my personal experience. So uh, this kind of risk that testing has been completed and signed off, and after we are coming to know that this is not a proper, so that is a biggest risk during that we have missed two releases due to that, and it was delay in the transformation. And yeah, so if the team members who are aware about this mapping and understand at least, then it would be great that whatever they are working on, they are able to understand it, and the work is as accurate to process further.
Okay, so essentially what you're trying to say is knowledge and training are the
Yes.
key aspects which needs to be, I mean, like these are like sacrosanct in such sensitive migrations. Okay.
Yes.
Thank you so much. That's all from my side.
Thank you everyone.
Thank you, Shraddha. Shriyanka and Rakesh, do we need a couple of minutes of break, or should we proceed to the next one?
I'm absolutely fine to continue, but Shriyanka, if you need a brief
I
break.
do. I'm absolutely fine to continue, but I will switch off my video and fetch a coffee. Let's continue if that's okay.
Yeah, that's okay. Okay. So in the meantime, let Rashmi can start preparing her deck. Rashmi?
Oh, yeah, sure.
Rashmi, I think you can.
Am I?
Yes. You're audible and your screen is visible. You can start.
Okay, thank you. So, good afternoon, everyone, and it's nice to talk in this forum. I'm Rashmi Shende. I'm working as a payments BA for around 4 years, and today I have picked up a topic of evolution in regulatory landscape in payments industry. So let's start. So agenda here is firstly we will see the objective and then what are the evolutionary phases in regulation and what are the bodies, regulatory bodies, and which are the main regulatory drivers to adapt the regulation framework, and then emerging regulatory trends, and finally the conclusion. Okay. So as I said, objective is to analyze the transformation of payment regulations globally, and it is driven by the changes in the payment ecosystem. So if we see in the last 3 or 4 decades, there is a significant change in the payments area, and it has a strong interdependence between regulatory evolution uh, on regulatory evolution. So payment regulatory landscape has transformed from like a fragmented national framework to more comprehensive platform independent global standards, and it is basically for addressing these new innovations and this new open finance and embedded finance concepts, and as well as end customer expectations. So let's first we will see what is the changes in payments area basically, and then its consequential significance in regulation. So firstly, if we go beyond 2000, so it was a, we can say, traditional banking era where mainly payments were done by cash and paper instruments like check, DD, and mostly are through the bank's channel. And that's why there were the banking laws and reserve requirements, and main governing bodies were central bank of that country or some correlated banking regulatory institutions. So after that, after 2000, there comes the electronic payment emergence, where I'm talking about globally. So there started a card networks. So Visa, MasterCard becomes the global player, and in retail transaction, we started using cards and as well as POS machine in some of the retail transaction. So and also there is a widespread of internet at that time in 2000, so that simulated the electronic fund transfers also. So it is from through net banking, or we go to banks and offline we say, and they perform a RTGS transaction on behalf of us, like that. So that was the electronic payment emergence, and there, from that perspective, then regulation adopted. So for card security, it adopted PCI DSS standards, and for when there is a electronic transfers, then comes into the picture that anti-money laundering and fraud detection laws. And at the same time, though the cross-border transactions were not that much significant in the volume at that time, but still it laid a basic foundation of cross-border payments regulation. So if we see the major regulations like PSD1, where SEPA was formed in 2007, if you say, and there they tried to treat the different countries euros payment as a though it is a cross border, as a domestic payment. So the goal was to strengthen the euro currency and make impact on the global in the global area. So that is the main regulation. So PSD1 was out, and PSD1 also led or promote the innovation and competitions in the payments market. At the same time, there was a 2008, there was a financial crisis, and all countries reformed their laws and regulations. So if you say in US, there is a Dodd-Frank Act was reformed to ensure financial stability and consumer protection, protecting customers, and there should be a transparency between financial institution. So that major regulations we see in 2000 to 2010. Now moving to third area, means we have, if you see 3 periods, so the third is a digital innovation. So we can say it from 2010 to till now, we are playing with the digital payments, and there comes the fintech integration, where in the finance is open, like open finance, like non-financial player entities come into the finance ecosystem, and bank has to share customer data in secure way through open banking. So it's like a providing banking as a service system to the customer, basically. So that fintech integration we saw in after 2010. Along with that, there is a mobile use was evolved, and means large number of people started using mobile phones. So we saw digital wallets, and then digital banking apps, those in this, and as well as in 2015, if we see the India built a real-time payment system, UPI. UPI was launched in 2016, and at same time UKFPS. So there is a completely total new payment system framework, which was assuring end beneficiaries that they will receive their money almost in really in real time, to say. So that was evolved, and as well as the cryptocurrency, like Bitcoin's transactions started happening. So from considering these evolutions in payments area, the regulation that adopted, we can see PSD2, which emphasis more on open banking and consumer protection laws, and along with that open banking in UK, then UPI regulations led in India that laws, and along with that SEPA EC mandates for faster and transparent payments. So this is the diagrammatic picture where I have highlighted a basic major catalyst in payments area, and if you see the line graph there, it says the relative regulatory frameworks evolutions, like PCI. So just now whatever we discussed, I have shown it diagrammatically. So moving ahead, so it's key regulatory bodies and their roles. So if we see RBI USA, those are national regulatory bodies where they look after the different payment systems applicable for domestic payments, and along with that they oversight licensing and financial institutes auditing and all stuff. So second one, ECB or EBA, you can consider it as a regional framework where they have implemented PSD2, and PSD3 is coming shortly as per the discussion. And there they have published a framework for open banking and fraud prevention. Also, they are currently implementing digital euros. So some guidelines expected in PSD3 related to that. And below two, we can see as a global frameworks, FATF, which related to that compliance and sanction screening, then fraud detection that needs to be implemented, and BIS and FSB related to cross-border payments, where they look after that. There is a systemic risk management whenever there is a cross-border transactions, and basically Basel III principles, you can say, where the LCR and net stability funding ratios, like ratios are need to maintain by the financial institutes. So those laws. Okay. So if just now we have seen the whatever different regulations and laws are there, but what are the major regulatory drivers, means why we need to adapt this framework? If you see that, then first comes the consumer protection, where today we are talking about this financial embedded finance, and as well as open banking. So along with FI, there are non-FI players also, and they are through open banking they are communicating. So basically, there should be in end user perspective, there should be a personal data protection and security. So we can say that is adopted through some laws like GDPR and all. So and also for customers, there should be a transparency of payment. End-to-end tracking should be available. Then fair pricing. So if we talk about ISO 2022, then yeah, there is a tag for charges info. Then transparency, we can see the initiative like GPI. So where we can track the payment through UETR, and it will provide a transparency. Then dispute resolution mechanism. So it is also considered under the umbrella of regulation. So if we consider ISO 2022, there are methods like a mandate cancellation or mandate amendment, or also there are refund rights in case of incorrect pull of the money. So this we can see as part of consumer protection. These are the points considered while framing the regulatory laws. So second is systemic risk management. So here, along with FI, there are other non-FI entities also playing. So we have for all the payment service providers, we have to follow some basic standards like system resiliency or business continuity in case of fallback. Server damage, server downtime or something. What are the backup and recovery procedures? Or they should be for RTP payments, they should be 24/7 available to the end customer. Then third party. So currently there are many third party providers which are offering services like compliance and fraud detection or core banking management. So that case, we need to do third party risk management. Along with that, innovation, it is like financial inclusion in rural area. So that innovation and enablement perspective, we should be able to technology neutral approaches for interoperability and market integrity practices, which we already talked, like AFM, AML or CTF, then market manipulation prevention. So current regulatory framework is basically, we can broadly divide into global standards and like FATF, ISO 2022, then regional like GDPR, PSD2, and along with that technological also for interoperability like API standards, cybersecurity standards like OAuth 2.0 authorization and consumer protection. Okay, so these are the some funny memes in the world of regulation. So second one I closely relate because now it is transformed to ISO 2022. I don't tend to have to remember that 50G, 50K and such complex tags. Okay, moving ahead. Yeah, so if we talk about the future, then now we are using AI greatly, but for AI, there should be a use of responsible AI. Like AI, we cannot completely, totally dependent on the AI, and we need a human oversight. So whatever future regulatory frameworks, they have to consider these factors of artificial intelligence while creating the laws, and CDBC and stablecoins, cryptocurrency. So we have to later, currently it's in a very start stage, and we need to develop a legal framework for that. And we should, impact assessment should be done, whether all financial entities are able to offer that service, and it's like a open opportunity to for all or not such stuff. Then embedded finance regulations, where third party we need to do licensing requirements, and what are the risks if that system goes down. So then consumer protections, and fourth is the quantum safe security, where there is a risk that currently whatever the cryptographic processes or algorithms like RSA are there, that may be broken because of quantum computers. So that assessment also we need to do, and related risk mitigation we have to perform. And finally, the green finance, where many major FI are taking initiatives for zero carbon footprints or incentives on minimum e-waste or something like that. So finally, conclusion is payment is a living framework and that evolves when payment ecosystem evolves. And finally, we need to ensure financial stability. We need to comply with that regulatory guidelines to ensure financial stability and payment security, payment transparency, and along with that, consumer protection and legal accountability. So to have a built trustworthy ecosystem and safe innovation, we need a rigid payment regulation system. So that's all. Thank you. And yeah, I'm open for questions.
Great presentation. I think you've kind of summed up all of the stuff that is happening on the regulatory landscape, and you've brought in different technologies, different perspectives in terms of the focus, trends, all of that. So well done. Rashmi, maybe just a question in terms of it's a very simple question, but put yourself in the regulator's shoes, right? And what are the key challenges that regulators face today in the current environment? What is the core pressure under which regulators are operating?
Yeah, so basically now if we talk about the suppose in countries, so as I said, there is a now they are also opting for central bank digital currencies and all. So and this bitcoins and all, these are all new concepts and there is no standardization. So for if you go for a digital currencies, then there is no fixed value and it comes so we have some means fixed value or some regulation or something that needs to be laid down there. And along with that, this open banking, if you say so, new players are coming and new technologies and all. And in regulatory frameworks, I think there come large umbrella because you have to protect customer, you have to see financial institute, you have to means different aspects you need to consider when you now laid a framework. So it's all means it's not a simple thing. You need to consider all the factors, risks, and then you have to prepare a framework. So firstly, regulators need to it's what we can say. We need to learn that technology firstly. They need to adapt to that technology, understand that how it works, what are the pros, cons, and then only they can prepare rules or guidelines for that.
Absolutely. I understand. And maybe another follow-up question, and then I'll add a little more of my perspectives. When a payment goes through, do you know some of the top acts that come under, that kick in? Consider a payment moving from the US to India, right? You can touch upon licensing, payment and settlement. Do you know what are the core you can get into the legislative acts or market practice or high level, skim through which are the regulatory bodies. But can you add a little more depth into the regulatory environment of just one transaction moving from the US to India?
Yeah, so firstly, US to India, it will deal with both US payment system as well as Indian payment system. So basically both the regulatory laws which are present in US and when it comes to India, that also. And along with that CBPR plus, it's a some standard we are following for cross-border harmonization. So that stuff also we need to consider. And along with that, when it's a cross-border payment, it's a high visibility payment. So we need to consider sanctions and all gray list. That's all stuff we need to consider. Then yeah. So it's a corresponding banking thing, though, that all points we need to.
Thanks, Rashmi. Maybe I'll just add a little more flavor to that, right? So first and foremost, on the challenges experienced by regulators, the pace of technological change that is hitting a central bank or people who are trained to regulate, and regulate is basically look at the risks in terms of licensing, market actors, market behavior, so competition monitoring, are now having to upskill themselves overnight on quantum, data privacy, AI, tokenization. and these are public sector bodies which are, limited by size and in terms of the investment sometimes. So that's a very big challenge. And on the other hand, the fragmentation piece, because we are living in a time of high geopolitical fragmentation. So the act of bringing cross-border cooperation under the G20 umbrella, Rakesh, you've witnessed it in 2023, working on B20. It is a continuous journey, and sometimes it's also, you do not want to comply because you want competitive advantage, right, as a country. So there are all of these challenges, but at the same time, data privacy, cyber resilience, these are some common denominators without which, we cannot keep the financial system resilient and secure as we go into the future. And then specifically in terms of your cross-border payment journey, right? Like you can consider, of course, the OFAC lists or the US designated sanctions list is one thing which the credit of the payment would get checked against. So that's your OFAC coming into play. FATF, for the Financial Action Task Force, prescribes some of these specifically on wire transfers, but look up recommendation 16 and there's a big move to include, as the new world of crypto into the recommendation 16. So FATF comes into play. When there is a correspondent bank or any entity that is responsible for taking on the risk in cross-currency exchange, the Basel Committee for Supervision comes into play with Basel III guidelines on capital adequacy. And then for the last mile of settlement, you run into RBI's FEMA laws, as well as Payment and Settlement Act of 2007. There's a beautiful circular that's come out this week from the RBI in terms of making payments faster, more efficient, in line with the G20 cross-border roadmap. So those are some of the things that are happening, right? And it's happening on a day-to-day basis, because I think, towards all of the discussions today, whether we're looking at innovation, whether we're looking at straight-through processing, the regulators play a very key role in making innovation scale and possible. And you've touched upon all of those dimensions. So thank you for your presentation.
Even for cross borders, CLS is the one initiative, continuous link settlement, where we are both legs of transaction, P2P transaction should settle simultaneously. So that is also we have, means banks are adapting to.
There are two things. One is when you talk about SWIFT and ISO, and when you talk about CLS, SWIFT and CLS are market infrastructures. They're not regulators. They enable, right? So they reduce the risk through harmonization. FX risk is CLS, right? Because they bring in the 18 currencies which are CLS settled, and SWIFT, on the other hand, enables access and the cross-border flow of data. So SWIFT and CLS were an outcome of risk mitigation at a global. It's an act of global cooperation. Not we're not regulators, and neither is CLS. You could say the fabric for cross-border regulatory implementation happens through three key organizations: the BIS, SWIFT, and CLS, in terms of regulation, infrastructure and access, and underlying FX settlement risk. Okay, over to you, Rakesh.
Thank you.
Thank you.
Rashmi, great job done. Let me begin by saying, I think you have tried to put in a lot of things around regulatory developments or a regulatory landscape into a few slides. So since I work in that area of public policy, government relations, regulatory affairs, so I can very well understand how difficult it is to, put everything into a few slides. And
it's like putting ocean in a teacup, because it's a very vast topic.
Absolutely. So I can very well understand it. And this is regulatory landscape is something which is very, very closer to my heart. My opening question is, you have talked about a lot in terms of what are the, let's say, drivers, key regulatory drivers which impact the enactment of various regulations, etc. And you talked about, let's say, for example, consumer protection, systemic risk, etc. And do you think that geopolitics also has a role to play in the regulatory developments?
Yes.
And there is nothing right and wrong, but I would like to have your thoughts around it.
Yeah, definitely.
And if you could quote a few examples which you think those geopolitical developments have actually impacted the payments regulations.
Yeah. So yeah, geopolitics basically, as I said, every country will try to mix their currency as a strong. So in currently what is happening, this US tariffs and all, definitely it has an impact on on payments, and when it comes means uh, based on that currency, means currently USD and Euro are the mainly dominant currencies, and HK is trying to make their HKD, and there are a lot of efforts by them, like making HKD currency as a global. So they are also trying to push their currency on the top of it. So yeah, definitely on when there are differences, then we have to consider how our currency will what's the impact on our currency, and we have to means our infrastructure should be that much uh, robust, so that whatever impacts, we should be able to handle those impacts at global level, and our currency should remain resilient for that. So definitely there is an impact of it.
So absolutely. I mean, like, I completely get what you are trying to say. Maybe I will try to substantiate this with a few more examples, which will help you understand how geopolitics in the last couple of decades have impacted the payments ecosystem or the payments regulations globally. While you may think that the ongoing Ukraine-Russia conflict has nothing to do with payments, but it has impacted the global payments substantially, and not just in the recent past, because you may see this conflict going on. It started in 2022, but I'm going back to almost like 2014, when the Russia annexed Crimea, which is a region of the Ukraine. So there's a lot of things which have started happening since then. That's one of the instances which started in 2014. Then there is a lot of countries today are trying to become reliant or self-reliant when it comes to their domestic payments, and they are thinking about developing their national champions in the payments ecosystem, etc. That thought process is primarily driven by the global geopolitics, because no country now today wants to be dependent on the multinational players. And I mean, like, Shankar, nothing, please don't take it against Swift and all. So this is a growing thought process among many countries, that they want to become self-reliant when it comes to payments and payments ecosystem. So that's one of the things. The other thing which maybe I want to have your thoughts in, you must have heard about something called as DPI, Digital Public Infrastructure. And there's a lot of discussions going around treating digital payments as a DPI, as a digital public infrastructure. So what are your, if you have heard about DPI, and if you have any views around it, happy to listen to your views. But in case if you don't have much information around DPIs, that's absolutely fine. Maybe I can pitch in and explain it.
Yeah, basically, I haven't heard DPI, but yeah, if we see that currently that means previous in if we see previously there was only financial institutes in the payment ecosystem, but now non-financial institute, third parties are also involved, and they all need to communicate to make a single payment. It's not like from one bank to intermediary and then final bank it will go. So there are different systems which are basically talking, and based on that, they means I think there is interoperability or platform independence, means no need of similar platforms and all that they are means trying. So maybe that may be related to DPI. I'm not sure, but you can add.
Let me try and explain it to you. Let's, for the moment, remove the first letter, which is D, digital. Let's talk about the PNI, which is public infrastructure. Possibly that will help you understand what I'm trying to talk about. So public infrastructure, maybe I'll give you a very relatable example, is you must have used highways in your life. Let's say driving on a highway or traveling on a highway. That's a physical public infrastructure, right? Which is which is constructed and operationalized by, let's say, government or ministries, and it is there to make the people's life easier when they travel from, let's say, place A to place B, right? So that's an example of public infrastructure. Now let's replicate the same example in a digital world. So then it becomes a DPI, digital public infrastructure. So when we talk about digital public infrastructure and in the context of the payments is nothing but a digital public infrastructure. And the thought process, the growing thought process across the globe, and especially in the global south, has been that payments should be treated as a digital public infrastructure. And this should be developed and operationalized for the greater good of the society, and it should not be exploited for commercial benefits. That's a growing thought process across the globe. And one of the countries which has taken a leadership position in positioning, let's say, digital payments as a DPI is India itself. And a lot of other countries, and especially the global south countries, are talking and thinking on the similar lines. Now, one of the challenges which I see with DPI is a growing thought or a thought process of making anything which is a DPI should be offered either at a zero cost or at a nominal cost to the users. Right. However, whether it's a physical infrastructure or it's a digital infrastructure, it comes at a cost. Right. Now in India, let's come back to India again. You must have seen that the government has implemented zero MDR. You must have heard about the concept of MDR, merchant discount rate in the payment transaction. The government has implemented zero MDR in case of UPI and RuPay debit card transactions. Now obviously all the entities which operate in the payments ecosystem has to bear certain cost when they deploy all this digital infrastructure. And when the government talks about offering that infrastructure at a zero cost, is something which may not go down well with the participants in the ecosystem, right? So there is this whole, conundrum, which you can say, which is currently happening in terms of whether the payments should be offered at a zero cost, especially considering that there is a lot of investment in terms of capital, in terms of resources, etc., goes into it. So no problem. Even if you were not aware about the concept of DPI, it's absolutely fine.
Yeah, thanks for clarifying. Thank you.
Thank you so much, Rashmi. So then we'll move on to the last, but certainly not the least, Padma Malini.
Hello, Padma. We see you, but you're on mute.
Hi. Sorry, I'm sharing my screen.
पर्यंत आपल्याला ऑफर होती, थोडंफार मायनस प्लस करून 8-30 पर्यंत वगैरे जरी केली तरी करता येत होती ना.
You're able to see my screen?
Now, yes.
Thank you.
Actually, maybe we're seeing the wrong screen. We see you. If you've got a display connected, maybe you need to share that one.
Yeah. Hi. Hi, everyone. This is Padma Malini. I'm a senior business analyst, and I have close to 13 years of experience in the payments domain. Today, I will be presenting you on the topic of straight-through processing in payments. And I would be mainly focusing on the on how ISO 20422 migration has been will provide impact on improving the STP rates compared to the legacy formats. So to start with the overview of the cycle.
Padma, sorry to
Padma?
interrupt, but
Yeah.
I think we are not able to see your screen.
Okay. Sorry,
Uh,
one minute.
If you're facing challenge and if your draft presentation is same, I can share screen and let me know if you want me to flip the slide.
Yes, it is the same, Amaya.
Okay, so then
Maybe, maybe that's a better idea because I think you're struggling between displays.
let me know whenever you want me to flip the slide, okay?
Yeah,
So I'll start the timer. You can proceed.
sure. Hi, today I will be presenting you on the topic of straight-through processing in payments. So I will be focusing mainly on the post-ISO 20422 advantages. Yeah, next slide. So in the overview depicts that so how the raw data converts into or transform into the business value. So basically the structured data enables or drives automation, which in turn provides higher efficiency and accuracy. So by which we will be able to provide a measurable value across the payment ecosystem. So before we dive into the presentation, I would like to just highlight on what I will be covering in this presentation, mainly on what is STP and why STP matters in the payments world, and also how STP works and how it differs from the traditional workflow, pre and post ISO changes of how we can have a better STP rates, and a few case studies which I have included as well in the presentation. And at the end, to conclude how AI or ML will help us to improve the STP rates. Next slide. So basically, what is STP? STP or straight-through processing in payments is nothing but the automation of the entire payment lifecycle, starting from initiation till the reconciliation without any manual intervention. Basically, it's just to streamline the process of transaction lifecycle by allowing all the parties involved to send and receive both transaction as well as information electronically without any manual intervention. So as we all know, in the payments industry, or most of the banks and the financial institutions are following or have implemented STP in the BAU scenario. That means in the day-to-day activities, and other industries like e-commerce, healthcare, insurance, everybody follows an STP for their day-to-day activities. Yeah, next slide. So why STP matters is that according to me, STP drives tangible outcome, which in turn provides us the better accuracy and efficiency. So every second and every error saved in the payments world will equal to a happy customer experience. And since this is real time, the speed definitely matters. So as soon as the delay decreases, the customer will be happier. And how STP works. Next slide. How STP works is I have highlighted a basic overall flow from initiation till the reconciliation. So via any payment channel, if a customer initiates a payment, the raw payment, he will submit it via any digital banking or the internet banking to the respective banks or FIs. So there the banks will automatically validate the payment, and they will verify the payment if at all there are any data enrichment required. So if at all there are any data enrichment required, that the enrichment will happen. Post that the raw data will be converted into the respective format, either MT or if it is a cross-border transaction, either MT or an MX, or if it's an honors payment, they will segregate those payments. So based on this, they will once everything is verified and approved or authorized, the payment will be moved to the transaction sanction screening. sorry, I have misplaced here. So sanction screening, once the sanction screening is if it is a happy flow, if there is no hit, then it will go to the routing space. And once since we know the destination, we will go to the respective correspondent banks and or the CSM network. So in the CSM network, the clearing house will take care of the exchange of data between the financial institution, and also they will do the respective nettings if at all required. And then it will move to the settlement institution, where the actual settlement of funds will happen between the sender and the receiver. And at the end of the day, the reconciliation will happen for all these accounts which are processed on that particular day. So how this differs from the traditional process is that so in this STP flow from initiation till reconciliation, the process is fully automated, which means the delay is reduced. Another the prone to error is little bit reduced compared to the traditional flow. In the traditional flow, next slide please. In the traditional flow, the manual intervention of operations team is much more higher when compared to the fully automated flow. So because of which the cost is also higher, the operational delays as well as cost both are higher. And mainly for the high value transactions like RTGS transaction, the flow should be fully automated to avoid any delays as well, because since it is real time or at least near real time. Next slide. In this, I have highlighted a few of the pre-ISO problem which blocked STP or to reduced STP to achieve reduced STP rate. So mainly on the legacy MT format, we have the luxury of using free format text even in few of the messages, wherein which leads to frequent mismatches and manual correction. So the transaction landing in the repair queue is being a little bit higher compared to the newer standards. And moreover, to highlight different banks and clearing systems or different systems speaks different languages, which makes automation a little bit tougher. So that in turn we had a little lesser STP rates in the legacy formats. Next slide. How upgrading to ISO 20422 in enhancing STP is that it provides a richer and a structured data, and also it provides fields for each and every party involved in this entire life cycle of payment. So which means this standard is standardized across systems who are all involved in this payment chain. So it is clear and machine readable, and also the traceability for this payment is much more easier because of few of the tags which I have highlighted in the next slide. Actually, all the entire message is really important for us to empower or improve the STP rates. But the fewer tags which highlights or which attracted my attention are mainly on the tracking, screening, and automation on the reconciliation part. Mainly on the tracking part, we have the end-to-end ID, that is nothing but the EVTR, which help us to automate the accurate tracking of payment across systems. And the next one is the when it comes to postal address, we have structured address data for all the parties involved, including the intermediaries, not only the creditor and debtor agent. So which help us to screen, that is the ultimate debtor, ultimate creditor, everybody has a separate field, address field in this entire message. So the screening becomes much more easier, and which reduced the fraud, which reduced more fraud when compared to the legacy format. And also purpose code reduces the ambiguity of why we are initiating this payment and why it is moving forward to the next stage. And also when it comes to reconciliation, it becomes much more easier since we have more data in this remittance information field, wherein the reconciliation can be automated very well, wherein we can match the payments with respect to invoices. And also the creditor debtor agent, mainly the BICs and DNs are very clear when compared to the previous custom or MT formats, so which allow us to seamlessly route the message across the payment systems. Next slide. So here I have mentioned standardization is nothing but the ISO 20022 provides a common language, but which is called the standardization. But when it comes to transformation, we have to see this as an adaptation of a process rather than just a format change. So across system, we should understand that the entire process should be adapted or acquired to speak this common language, rather than just changing the format in each and every system will lead to a better STP rate or a business impact, I would say rather. The next slide. Yeah. So even though we have migrated to the latest version, I can still see few gaps in the latest world as well. So mainly to quote, there are two things. Since we are using a very stringent format now, say for example, if you miss to close a single XML tag, then again that message is going to fall into the repair queue. So still there is a chance that we will definitely have messages or repairs in this newer format as well. And also more complexity is getting added when since we are part of the coexistence period, at least until next month. So empty MX format, wherein we use the transaction manager to extract the empties, and still we will be transforming those to the custom formats. So this adds more complexity. So these gaps highlight the need for deeper redesign before and not just a format change across systems. Next slide. So to address these gaps, I have provided a few solution framework, wherein to start with the initiation part. So the data at the data validation and enrichment stage, better we can do an automated check and also automated enrichment part wherever possible, like mainly the names, the DNs, the address field, the purpose field, the category field, the charges info. So these are all standard or static field, wherein we will be able to do fewer auto checks whether it is correct or incorrect. And same way on the exception handling part, we can probably classify the payments, or we can probably classify the repairs and classify into minor, major, and critical, based on which we will urge to repair those payments to provide a better turnaround time. And also on the reconciliation part, as I have mentioned previously, the remittance information is much more clear, wherein we have the transaction reference, the invoice numbers. So the matching of payments and remittance information in the structured world is much more easier. So the reconciliation can very well be automated, and continuous monitoring of the STP KPI is also plays a vital role in making this framework work to improve the STP rate to a much higher level. Next slide, please. So there are two case studies which caught my attention, mainly from the HSBC perspective. They have mentioned that whenever they were using the empty format, that is the legacy format, due to the unstructured party details, they were screening delays, which gave a lower STP rates. Whereas in the newer structure, once they have migrated to the newer structure, they were able to have a very clear, richer contextual information in terms of remittance information, basically the invoice numbers, the payment terms, and the transaction reference, which enable automation in a better way. And also it reduces ambiguity where the bank is able to achieve a better STP rate. So they have highlighted that the data issues blocked STP previously, wherein now the structured data enables STP. Next slide, please. On the FIS part, with the help of their OPF product, they have streamlined operation across SEPA, since SEPA is already fully ISO compliant. So it offers consistent offering of the latest format, plus because of which the incidence has been much more reduced, and they were able to consistently maintain a higher STP rate. So as the STP rate increases, the customer queries and the incident has been drastically reduced, as shown in the screen. So wherein the architecture simplification along with ISO 20022 compliance together drive much better efficiency in the new era. Next slide, please. By combining all these above slides, I have tried to create a smaller chart and a simple table to understand how the STP rate or how much the STP rate has been increased from previous to the new standard after acquiring new standards basically. As I mentioned earlier, the repair still exists, but the number of transactions landing in the repair queue has been drastically reduced, because of which the settlement time has been increased, and also the customer queries have been drastically reduced to up to 40%. Next slide, please. So still we have fewer challenges wherein old systems, that is the legacy systems who are still using mainframe and any other old systems are facing struggles to consume the ISO 20422 data fully. The same way as previously mentioned, the operations team needs to be reskilled fully to better understand this XML structure or the structure of data and how all the system has adapted to this newer era. To better support the repairs and also even better support the entire operations. And with the ML models, we can very well predict what are all the frequently occurred errors in the previous both previous as well as MT as well as in the MX structure, and we can actually train a few of the AI models to auto repair the frequently failed transactions. So maybe we will pave path towards the near 99 to 100% STP rates. Last slide, please. Yeah, so to conclude in such a way that ISO 20422 laid the data foundation, wherein STP is the one which is going to deliver a business impact, which will give a better customer experience. So to conclude, I want to conclude and say that ISO 20422 builds the rail, wherein STP drives the train for us to provide a better business impact as well as a happy customer. So yeah, thank you so much for your time and patience. So if at all any questions, please let me know.
Great. I think, you've captured multiple dimensions of the ISO 20422. I liked your closing statement as well in terms of, building the rails and for customer experience and straight through processing.
Yeah.
When in your presentation specifically, you've mentioned a solution framework. Who is this targeted to? Is it the bank? Is it at an industry level? Who and how can you monitor some of the metrics that you've mentioned? Because some of it, like, you did three parts. One is end-to-end STP, and you talked about transaction initiation, you talked about the different roles, but not all of that is in one institution. It's spread out.
Yes. It is end-to-end, definitely.
Go on.
So
explain solution framework and metrics to me.
Yeah, this solution framework is basically targeted to the entire payment, who are all the parties involved in the entire payment chain. Say for example, so to start with, to transact a simple transaction, even if it is within the bank or a domestic transaction. Whenever we are initiating, there will be a business application involved who will initiate the transaction. If at all there is any middleware required, the middleware will be involved, and then the routing logic will be probably in the payment hub or at the payment processor, and it will go to the respective CSM network, or if at all not required, it will go to the another business application internally to the bank. And if it is a cross-border, it will go to the CSM, and it will go to the same way the checks will happen at their end, and it will go to the beneficiary. So the entire payment chain, every single block of it should adhere. If at all everybody is using the same ISO 20422 standard, everybody should adhere this automation at every stage. Basically, if a particular business application is doing only the initiation part, so at the initiation part, whenever I am initiating a transaction in an UI, even now the UI, I am saying there is a structure for initiating either MT or an XML message. But whenever you are initiating the message, once the message is fully initiated, still ops team are required to manually repair those verification at the message level. So at that level, probably they can do some auto check, or for the enrichment they can do. That is a separate block. Same way in the middleware, whatever processing they have to involve themselves to automate if at all there is any ACK or NAC, and how they are speaking to the business application. So those can be automated. So every block should take this how they have adhered the standard, newer standard, the same way the automation tool should happen across the entire payment chain is what I see.
Okay, and just another question. I mean, you talked about banks, etc. What does ISO 22222 do for fintechs? Do they take them away from the equation, or do they bring them closer?
I would say closer. Because every financial institution, I think the work will be a little bit easier for fintechs to adapt similar standards rather than communicating with each and every block again and again to repair the same things. So if at all everybody is following the same custom, then it must be easier and it brings closer, closer to each other. That's what I understand.
Thanks. I mean, just, in terms of evidencing some of it, the idea is to go machine readable, and even parts of this, right? Like if you just take the address itself, it becomes machine readable for a printer inside a bank to print postal addresses before sending physical mail out, right? And that itself is an API. That itself is a business for a smaller startup. So the idea is to also not just have it in one framework for one institution, but because it's open standards, how can it actually correspond to multi-rail, multi-currency, multi-infrastructure, multi-channel, and multi-vendor ecosystems is what this is also all about. So I like your idea of the framework, but it's impractical to think that everybody is going to move at once. It's open heart surgery in a way, right? So it's not exactly. It's not going to happen, overnight with all parts moving at the same pace and on the same rails. It's an incremental journey of getting to speak a common language, and even the common language is never going to be common, right? Like I hear a Malayali accent, so even when you look at Kannur or Palakkad, they are different dialects, right?
Exactly.
But it's the same language. So that's what ISO will ultimately do globally. Okay.
So in the
Rakesh.
agile world, maybe I think this incremental part is still feasible, at least probably in the near future. Definitely not overnight. Yes, I completely understand that. Okay.
Over to you, Rakesh. Thank you.
Thank you.
Thanks, Padma. I think you did a very great job in terms of putting this together. I have only one question, and I think in one of your slides, and I think one of the essence which I got from your presentation is you put a lot of emphasis on further improving the STP rates. My question to you is, there's a lot of discussion happening these days around use of artificial intelligence and including use of AI in the financial services, payments, fintech, etc. Do you see that AI can play a role in further enhancing the STP rates? That's one. And if yes, are there any specific areas where you think that AI can help in improving the STP rates?
Okay, so the way I see is with the advancement of machine learning and AI, so we can use the ML models, a few of the machine learning models, to understand the precision and accuracy of how the payments are getting processed in today's world, and how much repairs are being expected on a day-to-day basis. That is basically on the BAU part. So once we understand that, we can actually understand how much the frequent repairs can be very well predicted with this respective models, whatever we have today. So once we understand those areas wherein we can, these are the frequent, there are two frequent errors. Say for example, if there is any, if at all there is any mistake in the, if they have addressed with incorrect big codes or incorrect DNs, these are common errors which has to be auto checked for each and every transaction. So this is what ML has predicted. So we can take that and use AI to train a model to keep on understanding whether, irrespective of domestic or a cross-border or whatever payments it may be, keep on auto checking for those, and then classify this as a separate and classify based on the with the help of AI, we can classify whether it's a minor or a major repair, and based on that, we can take post that, or we can involve operations team to manually repair those if at all required, rather than involving ops team in the first step itself, even at the initiation step itself, to check each and every transaction. Probably we can involve and implement a few of the models and the AI and train AI to do this job, at least at the initiation level, is what my understanding is.
Okay, fair enough. Maybe one related question. I mean, like, there are different entities which participate, or which are part of, let's say, this entire transaction processing, etc. And each of the entities, if you look at today, they are in their different stages of, let's say, technology adoption. Do you think that all the entities which are part of the ecosystem will be comfortable in adopting or maybe using AI in all those areas which you just mentioned?
Definitely no. Because based on my experience, what I see is even fewer banks or fewer teams are not letting their custom formats behind and moving into ISO standard. It's just a format change, but still people are still relying on the custom formats only, not even empty. So in this scenario, definitely all the teams or all the blocks involved in this payment chain will be ready to accept AI or ML models immediately. But in the agile world, I think incrementally, probably down the line, once after November 25, once we are fully ISO for at least cross-border transaction, mainly for the cross-border transaction, at least down the line 3 to 4 years, we will be able to definitely achieve this, sir. That's what my understanding is.
Okay, fair enough. Yeah, so that's all from my side.
Thank you.
All right, so thanks a lot, Padma. I think this was last presentation for today. So we finish our day 1 of the competition for the payments green belt, and hope to see everyone tomorrow for the black belt. I'll just request Riyanka and Rakesh to wait for a minute, so then we can just wrap up, and then the others can probably see you tomorrow. Thank you so much.
Thanks to all the presenters.
Thank you.
Thank you. Bye-bye.